When it comes to getting a new car, the question that almost everyone asks is, should I lease or should I buy? You've probably heard the usual advice. Buying is smarter because you own the car. Leasing is just throwing money away. But what if I told you that the answer is way more complicated? And in 2025, the choice between leasing and buying might surprise you. Cut to two people, one smiling and driving a shiny new leased car, the other looking stressed, trying to pay for repairs on an old car. Narrator: leasing gives you low monthly payments, the latest models, and no worries about resale value. Buying means higher payments up front and over time, but at least you own your vehicle. Sounds simple, right? But is it really? Cut to animated text on screen. Leasing versus buying. What's cheaper? Narrator: today, we're diving deep into the true cost of leasing versus buying a car in 2025. We're going to break down every dollar, monthly payments, taxes, interest, rates, depreciation, maintenance, and even insurance, because when you factor everything in, the cheaper option isn't always what you'd expect. Visual: calculator icons, dollar signs, charts showing rising costs. Narrator: car prices have been rising, interest rates have fluctuated, and the market has changed dramatically since just a few years ago. Leasing deals might look better on paper, but what about mileage limits, wear and tear fees, early lease termination penalties? And for buyers, how much do you really pay when you add in repairs, taxes, and the loss in value every year? Cut to split screen. Leasing side with smooth, low monthly bills. Buying side with higher payments and unexpected repair bills. Narrator: most people don't realize that owning a car can cost way more than just your monthly payment. But leasing isn't always a free ride either. There's a lot to consider if you want to make the smartest financial decision. Text on screen with dramatic effect. Don't just guess, know the facts. Narrator: so, whether you're a first-time driver, a car enthusiast, or just someone who wants to save money, this video will give you the tools you need to decide. With confidence, closing visual for scene 1. Big bold text: leasing versus buying, which is cheaper in 2025, with a car zooming past. Narrator: ready to find out which option could save you thousands. Let's get started. Before diving into the numbers, it's important to understand the basic differences between leasing and buying a car. Leasing is basically like renting a car for a set period, usually 2 to 3 years. You pay a monthly fee to use the car, which is typically lower than a loan payment. At the end of the lease term, you return the car and have the option to lease a new one or walk away. Buying, on the other hand, means you take out a loan or pay cash to own the vehicle outright. You're responsible for the full price of the car. But once your loan is paid off, the car is yours and you can keep it as long as you want. Sounds simple enough? But there's a lot more to consider. With leasing, you'll often face mileage limits, usually between 10,000 to 15,000 miles per year. Go over those limits, and you could pay steep penalties. You're also expected to keep the car in good condition, meaning no major scratches, dents, or mechanical damage. Buying a car means you have no mileage restrictions, and you can customize or modify your vehicle however you want, but you're also on the hook for all repairs once the warranty expires, which can add up over time. Then there's depreciation, the value your car loses every year. New cars lose about 20% of their value in the first year alone, and around 60% in 5 years. This affects how much you'll get if you decide to sell the car later. Leasing shifts the depreciation risk to the leasing company, which is why monthly payments are lower, but you never own the car. So, the real question is, which setup suits your lifestyle and finances better? Do you want lower monthly payments and a new car every few years, or do you want to build equity by owning your vehicle long-term? In the next scene, we'll break down the actual costs and see which option is cheaper based on real numbers in 2025. Now that we understand the basics of leasing and buying, let's dive into a real-world cost comparison to see which option is actually cheaper in 2025. Imagine you're interested in the same brand new car, priced at $35,000. If you decide to lease, your monthly payments might be around $400 per month. Typically for a 36-month lease, leasing usually requires a small down payment or security deposit, plus fees at signing. At the end of the lease, you return the car, nora sale asale, but you don't own anything. On the other hand, buying the car with a loan could mean monthly payments of roughly $650. Assuming a 5-year loan at current interest rates, you'll usually need a larger down payment, say $5,000 or more, and you're responsible for taxes and fees up front. But here's where the numbers get interesting. Leasing payments are lower, yes, but remember, you never own the car, and at the end of the lease, you might have to pay extra if you exceed mileage limits or return the car with damage. Buying means higher monthly payments. But once your loan is paid off, the car is yours, free and clear. That means no monthly payments, though you still have maintenance costs. Then there's depreciation, which affects your resale value if you buy. A new car loses about 20% of its value in the first year and roughly 60% after 5 years. So after 5 years, your $35,000 car might only be worth $14,000 to $15,000 when you lease. You don't worry about depreciation, it's the leasing company's risk. Over a 3-year period, leasing might cost you roughly $14,400, 36 months times $400. Buying could cost around $23,400. In loan payments alone, 36 months times $650, not including taxes, insurance, and maintenance. But after 3 years, you still own the car, which might be worth $20,000 at that time. This equity can be used as a trade-in or sold privately. So, when you factor in the residual value, buying may save you money in the long run, but only if you keep the car for several years beyond your loan term. Leasing is cheaper upfront and great if you want a new car every few years. But the costs add up if you keep leasing indefinitely. Which option fits your financial goals? Keep watching. We'll explore hidden costs and flexibility next. So far, we've looked at the basics and the upfront costs, but the true cost of leasing versus buying goes deeper. Let's talk about the hidden costs and flexibility factors that can make a big difference. When you buy a car, you're responsible for everything, not just the monthly loan payments. This means paying for maintenance and repairs once the warranty expires. And trust me, repairs can be expensive, especially as the car gets older. New tires, brake replacements, unexpected engine issues, these costs add up quickly. On the other hand, leasing usually includes a manufacturer's warranty for the lease term, so major repairs are often covered. You typically pay less for insurance since leased cars often require only standard coverage. However, leasing comes with its own hidden costs. Mileage limits are a big one. Most leases allow 10,000 to 15,000 miles per year. Go over that, and you'll pay hefty fees per extra mile, sometimes as high as 25 cents or more per mile. Then, there's the wear and tear policy. Minor scratches, dings, or interior damage could lead to additional charges when you return the car. Another consideration is flexibility. Leasing ties you to a contract, usually 2 to 3 years, and ending it early can be costly. Buying gives you the freedom to sell or trade your car whenever you want. So, if you love driving new cars every few years without worrying about repairs, leasing might be your best bet. But if you want long-term ownership and flexibility, buying can be the smarter financial move if you're prepared for the responsibilities. In the final scene, we'll wrap up with a clear verdict to help you decide which option fits your lifestyle and budget best. Alright, we've covered a lot: the basics, real costs, hidden fees, and flexibility. So, what's the final verdict? Which is actually cheaper in 2025, leasing or buying? The honest answer is, it depends on your lifestyle, priorities, and financial goals. If you value lower monthly payments, enjoy driving new cars every few years, and don't want to worry about repairs or resale value, leasing might be the smarter choice for you. Leasing lets you drive a brand new car without the long-term commitment, but keep an eye on mileage limits and potential fees. On the other hand, if you want to build equity and own a car outright, buying can save you money over the long run, especially if you plan to keep your vehicle for 5 years or more. Ownership comes with more responsibility, like maintenance and repairs, but it also means no monthly payments once your loan is paid off. Remember, buying gives you the freedom to drive as much as you want and customize your car. Leasing contracts tend to be strict about wear and mileage. Also, consider your financial situation. Are you comfortable with a larger down payment? Can you handle unpredictable repair costs? Ultimately, the 2025 car market and your personal needs should guide your decision before you make your choice. Run the numbers based on your budget, driving habits, and preferences. Use online calculators. Ask dealerships for detailed lease and loan quotes. And don't forget to factor in insurance, taxes, and maintenance. If you found this video helpful, please hit that like button, subscribe for more expert car and finance advice, and turn on notifications so you never miss a video. Tell us in the comments, would you lease or buy your next car? What's your top priority? Cost, flexibility, or ownership? Thanks for watching, and drive smart in 2025.